This is incredible. What you see over here is the Bitcoin price year to date. So what has Bitcoin done in the last 2 weeks? This is not a random altcoin or a random penny stock. This is actually Bitcoin. And Bitcoin has so far in its first 2 weeks of this year appreciated by roughly 26%. We are above 20K. We are hovering around 21K right now. Now, why is this happening, right? In order to answer how sustainable all of this is and if this is a bull trap or if this can actually start another bull run, we first of all need to understand why we are rallying in the first place. I think the source of all of this is not necessarily sudden retail interest, right? It's not like suddenly the retail investor woke up and thought, hey, I have to buy into Bitcoin now, and it all happens in a very short period of time. What I think is more likely here is that this is market manipulation to a degree. And why is that? Because first of all, we've seen a lot of short interest in Bitcoin. So a lot of people were actually betting on falling prices. When you've got retail betting on falling prices, this incentivizes the whales, it incentivizes the centralized exchanges to push up the price, to basically get the liquidation fee that comes with liquidating the shorts, right? When you bet on falling prices, you have to deposit some kind of a collateral. Now, when the position goes against you and the price isn't actually falling, it's rising, then you get liquidated. You have to post your collateral plus a fee. And this fee goes to the centralized exchange. So you're directly betting against centralized exchanges when you're betting on falling prices. Now, when in aggregate, the market is heavily betting on falling prices, you get manipulation, right? You get a lot of incentive to push up the price, at least short term. And this is, I think, what we are seeing because it's currently the weekend, right? Liquidity isn't very high. There's not a lot of trading happening. And especially during times when there's not much trading, it's easier to manipulate the prices because the order books tend to be thinner. So you need less capital in order to move the market and to change the reference price. This is how we can very quickly step up and up. And this can go the further, the more short interest actually builds up. So let's see how strong the shorts really are. Because if, again, a lot of shorts build up, then there's again incentive to push this price further up. Now, it's not the very first time we see something like this, right? Especially during bear markets when there's very little interest on crypto, when nobody's really trading crypto, and the few people that stay, they are rather pessimistic. Especially during those times, we see these kinds of manipulation efforts very, very often. And the very first time I've actually observed this was in 2019, and I've talked about this a bit more in the prior video. But we had a pretty similar situation. We are going sideways for quite a while, very little trading activity, very little price action. And you can see how the retail crowd might have set their level of potentially shorting at $4,100. Right? At 4,100 for Bitcoin. This is where a lot of people were then shorting, thinking that we're simply just going further sideways. So a lot of short interest, and then came the big breakout, very, very sudden. Within 1 day, Bitcoin went up by 19% here, and it even continued a bit to the next day to 27%. Very, very similar setup. And what we can see over here, and this is, I think, is very, very interesting, is we did not see how this manipulated price afterwards deflated again, right? This actually continued for quite a while. We went then up from these 5K, right? We jumped from 4 to 5K. We then went up all the way to 14K. So even though the price was obviously manipulated, it did not instantly deflate. Now, why is that? I think it has a lot to do with retail potentially jumping back in, because when the price suddenly can rise that quickly, this obviously creates a lot of attention. People are checking crypto YouTube, for example, and trying to find out what's actually going on. Is this sustained? Does it make sense to jump back into crypto? And especially when we've been at these low sideways trading ranges for quite a while, and then we see a breakout, this can create some kind of a flywheel effect, right? People are now suddenly jumping in. So even though the manipulators that have pushed up the price here short term, they might now be dumping, but all of the attention that's being created with such a rally, it might be enough to sustain the price at the elevated prices. So how should we go about this, right? Is there enough attention now created from this rally? That's the big question, because obviously this is a significant rally. We have pretty much today, or let's say in year to date, we have pretty much canceled out the entire FTX collapse in terms of price movements for Bitcoin, right? We are back at pre-FTX collapse levels. So this is a significant rally. How should we deal with this? Now, the way I deal with this is I look at moving averages. And if you're already a long-term subscriber of this channel, you know exactly what I'm talking about. But a lot of people here that especially come to the videos during bull times are not yet subscribers. So I've backtested a strategy that tries to time the market objectively, okay? That tries to figure out when should we go long, when should we go short, how should we bet on the market directionally. And what you see over here drawn on this chart is a simple moving average. It's the 43-day simple moving average. Now why 43-day? Because that's the one in my backtest, in my simulation of buying and selling worked the best. Now, what's the strategy? It's very straightforward. It's you want to be selling or you want to be betting on falling prices whenever the price is below the moving average, and you want to be betting on rising prices whenever the price is above the moving average. Okay, and you simply just check at the end of the day, is the price currently above or below? End of the day meaning UTC time zone, and then we decide, okay, in what direction do we bet? And you can make a backtest on this. You can also incorporate the trading fees that you potentially have with this. I've done all of that. And with that, you find out the 43-day simple moving average works the best. Now, is this just random? Not necessarily. So this is the backtested result, right? This is the last 5 years, but I've checked this on the entire Bitcoin history. The best moving average isn't that different. So it's kind of like a consistent result we get. In the last 5 years, this is the kind of outperformance you get, right? In white is the Bitcoin price, and in green is the backtested result. Now, this is a linear scale, so we can't really see what happened here in the early days, so we can actually change this to a logarithmic scale. This is what we see, right? So we have here our 2018 crypto winter, our recovery, then the jump up that I was talking about, right? The short squeeze. Here's the Corona crash, then the move up again. And here now the recent crypto winter. This backtest has been done roughly 1 month ago, right? I update these kinds of backtests regularly. And we can see, obviously, there's quite a bit of outperformance, right? One of these horizontal lines is a 10x. And on the other hand, we also see that the volatility of the price development, of the portfolio development is lower, right? From top to bottom, it goes lower, goes much less low than for holding just Bitcoin, right? You have less of a drawdown risk. So this is quite interesting. What was the annualized return on this, on the 43-day simple moving average? It was 103% per annum. So basically you doubled your money every year, whereas if you just held Bitcoin during this time, you would have gotten roughly 30% per annum. Now, what is this chart over here? It's basically a summary of these different moving averages, because instead of taking the 43-day, you could take all kinds of moving averages, right? So let's just draw here a moving average, double click on this, and we can change the length here, right? We could either make it very, very short and then sell quicker and buy in quicker, or we can make it longer in duration and find out, is maybe that kind of a moving average a bit better? So you want to find out what's the best duration. And the duration of the moving average is here on the x-axis. Okay, so I've tested all the way from 1 day, which basically just means look at yesterday's price, it go up and down and do the same direction, all the way to the 52-day simple moving average. Okay, and in black, we've got buying and holding as a reference point. And what I find very interesting about this chart, and this chart looks very similar to a lot of other cryptocurrencies, it's not just working for Bitcoin. What I find interesting about this chart is when you follow the momentum, because this is a momentum trading strategy, if you follow momentum, if you tend to follow, when prices tend to rise, you simply go long. When prices tend to fall, you simply go short. When you do that, you tend to outperform as long as you don't overdo it and as long as you don't zoom in too much into the short-term noise and then start trading all the time and generating all of these trading fees. So I've simulated this now with 0.2% per trade in fees. Okay, so when you don't overtrade this, when you take a moving average that's more than 2 weeks, you tend to outperform, directionally speaking, just buying and holding. So it's better than buying and holding when your moving average is above 2 weeks. And what I'm using now here for this plotting is the 43-day. You could, in theory, also use the 48-day, but the 43 is slightly better. Okay, so this is what we are plotting here. And let's get rid of the other moving average. Currently, we are above that moving average since the 6th of January, actually. Now, it is hard to follow this in practice. And the reason why it's hard is because you do get your failed signals and you have to get in and out of the market all the time. And you actually do get more failed signals than positive signals. You do get your fake outs, right? So for example, here, right, on the 13th of December, you would have bought. And then on the, what is it? The 16th. So from the 13th to the 16th, you would have sold, you would have lost 6 to 7% in that trade, right? You buy high, you sell low during one of those. And then again over here, you would have bought on the 20th, you would have sold on the 22nd. So you buy high, you sell low whenever it goes sideways and you get the fake outs. And these fake outs tend to happen comparatively often. Now, that being said, even though you do make a lot of wrong trades with that, whenever the trades do come to fruition, right, whenever it is correct, then it breaks out that massively that it basically canceled out all the bad trades you did in the past, right? So even though you might hit the jackpot only 30% of the time or so, when you do hit it, then it is massive and you do make all the money that then creates this nice outperformance, basically a doubling every year. Now, I've done a lot of these backtests for many, many different altcoins, right? So feel free to check out the premium membership where I've done these backtests, where I also share all the Excel sheets, how to make them, right? You can even run them yourselves. You can add some other buffer in here. We also have the exponential moving average backtests over here. All kinds of things. If you want to have a backtest for your particular altcoin, especially, feel free to also ask this simply in the premium membership, right? So there's a chat there where you can also ask me questions. Feel free to check that out. For now, in this kind of an environment, per backtest, it says it doesn't make sense to be bullish, right? It doesn't make sense to buy. And this is simply what I'd be doing, directionally speaking. Now, I'm not saying this can't deflate, right? There are obviously now very elevated prices, and depending on how much attention there is, this can go down short term, and there is quite a bit of risk to go down. If you have not taken any of this ready, right? If you have not dollar cost averaged in, as I say so often on this channel, right? If you haven't done this and you're now considering to FOMO in, what I think is probably best is to wait at least for the price to go sideways for a while, to somewhat get the moving average to catch up with this. Because otherwise you might be buying now at these elevated levels, and it really could, if it does deflate, could put quite a bit of a hit on your portfolio until we cross the moving average again, right? So my idea in general, conceptually, is to have some kind of a system that is back-tested, that takes away all of these emotions. Because once you've got emotions involved, it's very likely you're not going to make the right choice at the right time. The best is to have a system, even though it might not be perfect, that takes out the emotions and simply just blindly follow that system. And then based on that, hope that this continues to work in the future as it has in the past. That's, I think, a better approach than simply just doing it by gut feeling, right? So currently, right, I'm obviously bullish on this. I continue dollar cost average in. I am long-term very bullish on Bitcoin. I do think at some point in time we will see again a new all-time high. My time horizon is a bit longer than just a few days. If yours is just the next 1 or 2 days, right, then be careful, right? This can potentially go down. It doesn't have to. If we do see another bull rally, we could just continue to go up, but simply just wait at least for a bit of a sideways movement until this consolidates. There is now a lot of risk in the market, right? We have to be realistic here. So you're basically betting now. If you're buying today, you're basically betting now on enough attention coming to crypto to support these prices. And it's unclear so far if this is already the case. If you found this useful, feel free to give this a thumbs up, feel free to share this, and of course any comment would be appreciated. I try to answer at least the very interesting comments, so looking forward to that, and of course see you in the next video. Bye bye.